All right, guys, capital goes where it is treated best. And you may have heard of this or heard me say that many times on this channel. And we have a post here from Wall Street Silver that encapsulates this very well. You may have seen this in the news. Breaking news from Austrian Mint. And here we have the translation, which I'm going to read to you right now. So here we go. Obviously, precious metals are in demand like never before. The Austrian Mint hardly keeps up with the production of the Vienna Philharmonic in gold, silver, and platinum and operates double shifts. Silver, in particular, is currently swept from the market and practically sold out. Hey, that's thanks to you guys. There are pre-orders for every ounce that is produced. There is now so much international demand for silver that we cannot produce as much as the market would like. We have orders for the next few weeks, and every ounce we produce has been sold. That comes from Gerard Starsick, General Director of the Austrian Mint. So that is huge. And funny enough, we've got some great performance from metals today. Gold is doing pretty well. Silver is doing pretty well. And you guys are really, ramping up the demand here. And also, hey, it just goes to show, like I said, capital goes where it's treated best. Why not go to, assets like gold and silver when you start to see things like the DXY come down, finally broke below the 92 level, which again just signifies that, we've got some pretty interesting capital issues here within the United States. It's a long-term issue that we've had. But obviously, within the last couple of years or since last year, we've had so much money just being dumped into our economy that we're now starting to see things like this show up, especially at the gas pumps. Consumer prices rise more than expected, pushed by 9.1% jump in gasoline. We've been talking about this over the last couple of weeks. Some of you guys have even said, hey, gas prices are pretty crazy. We've talked about it on this channel, so on and so forth. But as far as the long-term prospects of the dollar and relative to gold, and just as a representation of the U.S. economy relative to other economies, things aren't looking the best. And we are going to take a look at this relationship through the lens of something called terms of trade. And it's a way that we can kind of get a view on foreign exchange rates for currencies. So for those of you who aren't familiar with terms of trade, as far as its relationship with foreign exchange rates and currencies, here's a quick explanation from Investopedia. And I quote, "A ratio comparing export prices to import prices, the terms of trade is related to current accounts and the balance of payments. If the price of a country's exports rises by a greater rate than that of its imports, its terms of trade have favorably improved. Increasing terms of trade shows greater demand for the country's exports. This, in turn, results in rising revenues from exports, which provides increased demand for the country's currency and an increase in the currency's value." That's important because of what exactly has been happening to the terms of trade of the United States and our currency's value over the decades. Well, glad you asked, and I'm pretty sure you can automatically assume what I'm about to show you. Pretty much almost an L shape here for loss. I'm just kidding. But as you can see here, we had a huge drop here in the 1970s, and we've been in this range for some time, which basically shows that our exports were at a higher price or rate of or at a rate that was greater than our import prices. But now that relationship has pretty much switched, where the import prices are growing at a faster rate than our export prices. And again, that devalues our currency. And Here's another country that we can pretty much draw a parallel with. This is Japan. Japan pretty much has the same look. What about a country that has been reportedly been doing well over the last few years? Here's China. China has actually been on the rise a bit over the last couple of decades. So with China, we're starting to see their prices increase for their exports at a faster rate than their imports. And what else are we seeing from China? China takes new foreign investment top spot from the US. Check this out. China has overtaken the US as the world's top destination for new foreign direct investment, according to UN figures released on Sunday. New investments into America from overseas companies fell by almost half last year. In contrast, UN figures show direct investment into Chinese firms climbed 4%, putting it number one globally. So guys, the US dollar as a competitor with other countries, we're not doing that well. And obviously, capital is seeking a place of safety. And one of the places of safety that they're seeking is silver. So guys, let me know what you think about this in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.